Welcome to my YouTube channel once again. This is Kelvin, and today I'll be teaching you guys a strategy that you can use to make 1:2.5 risks to reward, 1:3, 1:4, 1:5, 1:8, 1:10, depending on your trading style. If you are an aggressive trader, this strategy is for you. If you're a conservative trader as well, you can also apply this strategy and you will see it playing out 90% of the time, guys. Alright, so I'll be using EURJPY for illustration purposes. Okay, I'll hide these and this as well. Alright, so this strategy is the Fibonacci strategy, refined Fibonacci strategy, guys. For those that are saying Fibonacci doesn't work, I'm here to prove you wrong and show you another concept, another dynamic approach to this Fibonacci tool. Alright, so in this scenario we have a trending market, and this strategy can be applied to trending markets, and you can also apply them to consolidation markets as well. But the best place to practicalize this strategy is on the trending market. And so I've backtested this strategy on the 1 hour time frame, and I've seen it playing out 98% of the time. Alright, and we took a signal on this pair, EURJPY, and we were able to catch 1:2.5 risks to reward. I'm going to show you that as well. Alright, so this strategy, as you all know, is applicable on a trending market. So let's say you have this in your charts and already you've done your analysis on the higher time frames and you've identified the direction of the market. So you scale down to lower time frame on the 1 hour time frame and you look for this particular setup or a scenario like this, right? So you're trying to take this to the downside because this is already a downtrend. So this strategy can be applicable in this scenario. In a situation like this, you take your Fibonacci tool and you place it at the last high, the last lower high. The 1% should be at the last lower high, then the 0% should be at the low, the lowest low you have. Alright, when you have these guys, you tend to mark out your zones, these levels, right? We'll mark out the 0.618. I don't use a line because I tend to treat this as a level, because price might react somewhere here and it might not necessarily mean that it is on that particular line. It can react above it, but just bear in mind that price tends to react at these certain levels. Alright, so the next level I'll be marking out is the 0.5%. I'll do the same for that. Alright, then the last level I'll be looking out for is the 0.786%. These three levels, market tends to respect it. These are the golden zones. The 0.382, 0.236, these levels doesn't play out 80% of the time. We only see price respecting these levels when we have impulsive moves in the market, like gold. If you notice, currently gold is respecting 0.236 and 0.382% mostly. So that's where most volumes are on gold currently. But for the concept of this particular pair I'm making use of, we are focusing on 0.5%, 0.618, and 0.786%. Alright, Once you've marked that out, you wait for price to react at these levels. 80% of the time, we see the 50% being respected. And once price comes back to this, we see sellers jumping in and accumulating a lot of volume to drag it to the downside. All right, so these are the areas I'm taking note of. The 0.5%, the 0.618, and lastly the 0.786%. All right, so this is what I'm expecting the market to give. And notice that I'm taking my profit at the minus 0.27. That is where I'll be taking my last profit, and I'll be closing 80% of my profit once I see price coming back to 0%. Once I see price coming back to 0%, I'm closing 80% of my profit. Then I will hold the remaining 20% up until price gets to 0.27%. I've noticed that this strategy plays out 98% of the time, and I will show you an example so that you see that this strategy works. All right, don't forget to subscribe to the channel and like the video, comment as well, and share the video, guys. I'll be dropping more educative contents like this. All right, so in this scenario, guys, we are expecting price to bounce at these levels once approaching, and we take our last profits at the minus 0.27%. okay, so let's see what we have here. I was able to catch this sell, guys, on EUR/JPY. I was looking at this. We got this high, then price came down, and we got this low. Okay, and already I've seen that price broke this low, guys. Price already broke here, and we saw a change of character. Price is now heading to the downside, so we are trying to catch this sell with the help of the Fibonacci tool, guys. This is what you do. You take your Fibonacci and you place it at the high. Then the 0% will be at the last low, the lowest point in the market, which was here. Okay. All right. So as you can see, guys, marking out my levels, we have the 0.5%, which was here. We have the 0.618, which was here. Then we have 0.786%. Okay, so I'll be marking out minus 0.27% for my last TP, because I want to sell this instrument or this currency pair. Okay, so once I remove this Fibonacci tool, notice what happened, guys. Price came all the way from this high, bounced at the 0%, then we saw price breaking this 0.5%. So for those that were trying to short this pair, would have entered here, then their stop loss tends to be above 0.618 so that they can be safe. You don't get stopped out. Alright, so assuming you took your sell here and your stop loss was above this 0.618%, then your take profit should be here. Notice what happened, guys. Price tapped this level and it wasn't able to touch your stop loss, and you'd have made some money, you'd have made some profit, guys. Alright, so with that being said, now I'll remove this, and let's say you were trying to take a sell at the 0.7618%. So you were shorting the market here. Your stop loss should be above. Let's say your stop loss was here, and your take profit as well is minus 0.27%. Notice what happened, guys. You would have been able to bank 7%. So we were risking 27 pips in this trade and targeting 191 pips. That's 1:7 risks to reward, guys. Okay, so another scenario is this, guys. Let's take a look at this example as well. Alright, guys, so this is another example on Euro JPY. Okay, price was in a downtrend. I was able to spot this on the 1 hour time frame, and so over here I was trying to take a sell. So using the Fibonacci tool, this was our last high, then you connect it to the lowest point in the market. Okay, and already I have my trend line marked out, as you can see. So I was already anticipating for price to come back to this trend line, to touch this trend line the third time, so that we can take it to the downside. But price wasn't able to get to that trend line, and using the Fibonacci tool, I marked out my levels as well. So this is the 50%, and this is the 0.618%. And lastly, this is the 0.786%. Alright, and this is minus 0.27%. So I'll remove the Fibonacci tool, guys. You see the magic. I was selling here at the 0.50%. My entry was here, guys, and just like I said in the beginning of this video, it depends on your trading style and your risk appetite. So I was targeting the 0.27% as my last TP, and my first take profit, or where I closed 80% of my profit, was here. So my stop loss was above the 0.618%. In case price tends to come back to this trend line, to touch this trend line, I was taking note of that as well and trading conservatively, and my stop loss was above the 0.618%, just to be safe. So as you can see, this trade already gave us 1:3 3.8 RR, but when I called this setup, we took the sell over here and we were able to bank approximately 1:2.5 RR. Alright, this was almost the entry point, guys, because I noticed there was a hanging man. As you can see on the 1 hour time frame, we have that as our confluence. There was a hanging man signaling that sellers are now in charge. And also my EMAs, as you can see, we are bearish with speed on the EMAs. We are bearish with speed. We had a cross on the 1 hour time frame, so this was signaling that we are bearish with speed. As you can see, with this strategy you can bank lots of profits, and once you add this to your trading strategies, whether you're trading ICT, SMC, price action, support and demand, whichever strategy you're trading, guys, you can apply this Fibonacci strategy and you will see the magic. Don't forget to subscribe to the YouTube channel and like and comment, and as well follow my Telegram channel. I'll be posting the link on the description